Hello traders, wonderful weekend. Vladimir here. This is the weekly forecast 12th of June 2016. Well, I hope you are ready because the event that probably the whole world was looking for is right about to happen. And I am talking about the FOMC meetings, and that happens this Wednesday. Now you might wonder what and why this event so special and so important. Maybe two things. One, this is the event that the traders were waiting for. According to the Federal Reserve release on last month of 2015, they say they will get more raises of the rates. And by all the analysts and expectations and the hints from the Federal Reserve himself, the traders expected June. The second reason it's so important is because the last non-farm payrolls might trigger many of the Fed members to avoid this move, and that's why we saw during the last couple of weeks the dollar being so weak. Mainly it got a bit stronger by Friday, the last Friday, versus the majors, but in reality it lost much more it gained since the same non-farm payrolls. So the biggest question would be, will the Fed be I wouldn't say brave but consistent enough to follow his own words from the last several meetings? We will know the answer this Wednesday. Now, there is one thing that is very clear. The only thing the Federal Reserve does not want to happen is to lose its face from the investors. And by that, Fed cannot suddenly switch positions from one view to completely other view unless something crazy happens, right? But in reality nothing crazy really happened because, well, that was just one non-farm payroll report. Plus the unemployment rate is still very good, under the same limit that Mr. Bernanke had when started with the quantitative easing, below 5%. And that brings us to the technical view and what are the setups. But before I do that, let's quickly go over the news we have this. As I said, the main event is going to be the FOMC meeting, and it slowly starts with China on Monday and the industrial production, then warming up with the retail sales and core retail sales in US on Tuesday, and Wednesday it happens. First, we have news, very important news from Britain as well, right? We have a climate count change, job situation in Britain. We have average earnings, and then we are warming up by crude oil inventories and the FOMC statement, funds rate, and the economic projections. After that, we might be a bit smarter. We have then the non-farm payrolls in Australia, monetary policy in Japan, which continues with the press conference, then rates in Switzerland, then we have the rates in UK, and you see how it goes and grows, right? By the end of the week, and on Friday we have a speech from Mr. Draghi. Like it's not enough. So this is going to be very busy week fundamentally. We can expect high volatility, which could be represented by big moves, or it could be also into ugly range with a lot of zigzags and false breaks. So my biggest recommendation for such week is, first of all, stick to your trading plan. Second, don't force, because many setups on such periods, and it started actually last week, a lot of tricky setups, a lot. And such things could look good, but if you look deeper, if normally, let's say you have like, I don't know, 4, 5, 6 rules before you get a setup, then on such weeks like we can have 2 or 3 and it looks for us like the whole package, but while in reality it's not. And that's why I say respect the market in such situations, stick to your exact plans, and here comes the end. If on normal conditions you would be good with small risk reward, now you have to keep it as high as possible, 1 to 3, 1 to 4, and aim even for more. Why? Because chances to hit a stop loss on such such conditions on the market are very high. The chances are very high to hit a stop loss. And that's what we can do, is to improve our rewards. So even if we lose 1, 2, 3, 4 trades in a row, one trade with good risk reward would bring us back. So we don't really need to be successful most of the times. Okay? And that's why this is very important for such conditions and such events in the market. So now we go to technical things, and this week I want to start with the gold. Now, gold rising because of lack of stability. If the Fed will clarify things, I believe the gold has all the reasons to try one more move down. And here is why. After all, one of the scenarios we have been talking about, if you remember from the last period, was this range. And so far we are moving inside of this range. Now, it is about a complete bend to bend move to the top of the range. Right? We can say it's almost there. So for us, it's time to get ready for possible sells. Possible sells back to the middle of this entire range, or even to the one more push down back to the bottom of the range. Okay, as long as we are moving inside. So how can we find the setup? If we take a look on the 4-hour chart, there is a very nice continuing divergence with 4 tops forming itself. So starting from this very point, or even one more push up, we are after sales. And the best, safest way to do so would be to get the false break. We already had one right here, even though it was very weak as it retraced immediately up. We are looking for a false break, means a close below the last high, and we are looking for a drop below the last low. Why? Because that what would give us the change of the momentum, right? Back to bearish, creating lower lows, lower highs and lower lows represent a move down. And after that we are looking for pullback on a lower time frame, somewhere in between the third to the half of the correctional move from here to here. Okay, and while we got this retrace on lower time frames, we very likely get it something like that. We can go in by break of trend line or fall back on the lower time frame, or if you don't have the time to sit and watch for the pair, then just a sell limit, in this case protecting the last stop before this false break on this time frame happen. And once we have that, we expect it to drop lower. Now, how much lower? That's a good question, because on the 4-hour chart it looks like we have kind of a special cycle here with divergence and everything good. So we are going to 38 up to down to 50 until we create a bullish divergence. Right? That would be the middle of the big range that we have from daily. And from there, all depends. Many things will be depend actually on what we will get fundamental. This is one of the reasons why the gold created this range, because now a break up and down both reasonable. That's normally what the investors create, right? They create a situation where it will everything technically would be possible. I still believe that watching on a weekly chart and a monthly chart, there are all the reasons for us to go for one more high back to 1500 or so, right? But I'm not quite convinced it already is ready to happen. So yes, I will want to move down, and yes, I will want after that go and buy dips. Same of course for the oops, what did I do? Same of course with silver. The problem is with silver, it doesn't have the same range pattern like the gold does, but it does create a potential bearish hidden divergence which is forming. On a 4-hour chart, it also potentially about to complete some kind of triple movement. So basically this is a very good zone for watching for false breaks, change of the momentum, pullbacks, and a possible sell. So I started with commodities this way because they are what the investors are looking for on situations when the moves are not clear on the forex market and when the things are not that stable on all related to the decisions from the leaders. And now we go back to forex and the best opportunities we have there. Euro pound. For long run, I think we are going higher. Are we ready already to make it happen? And here is where I start to be not that sure. We have a range as well on the daily chart, as you can see it right here. Right? Now, that was a head and shoulders pattern. Did a small move, now pulling back. This move is still possible, by the way. Okay, but currently we are watching for this top starting from 079 and bit higher up to 080 or so, maybe even higher, as a possible sell zone because of this ranging pattern. Why it's a ranging pattern? Because we did have one false break from up and one false break from down, if we take this as a support, and that makes it to be a potential range. So on the 4-hour chart we mark the triangle pattern we currently have, and we can say we are on a very nice sell zone. What is the best way to enter for sales in such situation? We have two things actually. One, we continue on playing this and we create false breaks like we saw with the gold. Then we change the momentum to bearish and selling pullbacks. Then we will be aiming for 38.2 of this move to happen first of all, and then possibly to the bottom of the range, something like again 076.50, 076, maybe even lower this time. That's one thing to watch. Second scenario is it changed down suddenly, break below the trend line, creating lower lows by here, and then we will be looking for pullbacks and sell after the pullback. Okay, so two false breaks on the top, close to the cycle zone of 61.8 or even slightly higher. That's slightly above 0.7940, and the break of this big trend line we have, okay, gaining the momentum suddenly to the downside, pull back after that in 2 or 3 waves, and we mark a trend line of the correction, and break below would be a great sell opportunity. Okay, so that's another pair to watch, and one more is the, well, I wouldn't say the same, but kind of opposite or mirrored, is the pound franc. Now pound franc is reaching monster levels, and I think if it will try to make a reversal, this is a wonderful sell zone, buy zone, potential buy zone. Why? Because we've had this movement, so I would expect some kind of a range after that, or some kind of attempt to create something like that, some deeper waving correction. But since it did already 2 waves up, that might be enough. But that's where we got 2 waves up. Now we drop below the low of this double cycle, which normally is where from things start to happen. Now we do have a bullish hidden divergence forming here, right? Higher lows on the chart, lower lows on the histogram. That's a scenario of bullish hidden divergence. Now on a 4-hour chart, if we observe here, what do we have? We have 161 place of this cycle, and we have, believe it or not, 161 of this cycle, the short cycle. And believe it or not, this is also a duplication zone. See that? This is also the duplication zone of this cycle. So anything from 137, which we currently already had on Friday, down to 136 is a potential buy zone. Now that's where I believe we might get ready for a possible buy. And for that to happen, we need, as I said, like with the Euro Pound 2 scenarios, 1, false breaks, because that will mean that the bears getting weaker, losing their momentum. Higher highs for momentum to be gained, pull back, and we can go and try to buy to the middle of this move, or maybe all the way to the top if we actually will go for a potential range. Now this is a monster opportunity, and start to watch that out. If it just keep going, let it go, because then there is a not bad chance at all that we are going to get this cycle a bit deeper, like 130 or so, until this divergence will recreate itself. So don't force a buy, but wait for it to create this scenario as we just talked about. And an alternative would be, of course, just break above this trend line. If that's what's about to happen, we will want, let's assume this is broken, gaining momentum, on lower time frames making correction, and then with the break of the correction we are going to try a buy. The idea here, again, as I said at the beginning of this video, to bring ourselves for a situation where we have minimum risk, maximum potential reward, and that's at least 1 to 3, ideally 1 to 4, 1 to 5 even. That's the trades we should trade. If we don't get it, we don't need to force. That's why in these situations, patience is the key, the biggest key. Okay, I always say that on my videos. Don't try to be a hero. I mean, the chances to end up with loss or big losses on such market conditions are much bigger than to end up with a profit. Okay, and the problem is that normally when something goes bad, what do we do as traders? Run away to hear how it goes to other traders, right? That's what we do normally, right? If something goes bad to me, okay, let's see what goes on with my friend or someone else on the forum. And what's the problem in such situation? On such places, you will normally see everyone doing better. How do you see that? Because everyone starts to post charts. Oh, that was my call. Oh, that was my call. Oh, that was my call. Everyone shows his great results. And you will never see someone talking also about his losses. And you never have idea how many losses were there. So the show off could be so confusing in such a situation. Could be such a disaster, because that's what could lead you to try and trade more, because you think, how come everyone makes money but not myself, right? That's a normal human question you might ask yourself. That's natural thought. And then the answer would be they don't make money, or even if they do, you know, it's 1, 2, 3 traders out of thousands that just suffer on such periods. And that's why I say, don't try to be one of the 1000 on such periods. Try to be one of the 1000 on normal conditions. That's much safer. Because normal condition, that's what will always move you forward. Such things are normally conditions that take you back. And one of the things the successful traders do, except by knowing when to trade, is also know when not to trade. Or at least when not to go nuts with trading. Take every opportunity. And that's exactly where it comes. Okay, now I don't say there are no opportunities. There are very, very good moves sometimes. But on many, these moves are random, surprising, not always technical the way you would expect it to be. And that's why I say the chances on such are against you. And the reason for that is very simple. That's not big money trading. When a big money is trading, the moves are clear, trends are clear, cycles are clear, corrections are clear, levels are clear. When not a big money trade, but what I call a rumor money trade, that's where they are looking for every potential stop loss they can catch. And our goal is to try and enjoy the big money, right? Just be a small part of all this big thing. Big money is not trading right now. Big money is waiting on the fence, sitting very comfortable on the fence, waiting for the best opportunity. And that's why I repeat my own words. Patience is a key. Okay, I always love to compare patience to fishing. Sorry in advance of all of you who don't love fishing. That's of course individual view. But just think about it. When you go to fish, you can spend 1 hour until the fish will bite, right? Will be there. It could be 2 hours, it could be 3 hours. You can spend a day without an opportunity. But once you have it, you hit it. And same here, you have to have your passions. Okay? Remember that. So that's why I say don't just jump in because, wow, that looks good. Yeah, you might turn to be a winner, but the chances are against. Right? You know, crossing a road when the light is red and the traffic is all the cars are moving very, very fast, you still can successfully cross the road if you would be very tricky and sneaky. But the chances are against you because that could end up very bad. Very, 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 very bad. Right? And you don't do that. I hope, at least. Right? Same in trading. Why to go and try to cross the street to make it like a hero call or hero move when the chances are completely against you. Think about it deeper, you would understand what I meant by that. Now let's move on. We spoke about the pound crosses, which also would be affected by a week after that when the referendum comes, right? About the Brexit idea. Now, what's happening with the majors? Now, about majors, my view is clear. Avoid them. For the euro dollar, we spoke about it. We have a big chance the euro dollar to make the triple cycle like this. And on the same time, there is a very big chance that we are now entered the range because we did have one false break here. We do have false break right here. So we can play inside a range. That's why I don't think anything should be done currently. And if yes, I would try actually to sell. Okay, on the short term with 2 false breaks, we can go and try a buy. Okay, like here for example. You see we had 1 false break, 2 false break, but we never changed the momentum, right? We never had higher highs and just continue lower. That's what I call a patience. And you're waiting for 2 false break. It happened. Wait for a momentum to change. If it will, fine. You're there. If not, let it go. And right now it goes. So on a short term, yeah, we might get some revisit to the trend line here and some divergence take place, false breaks and correction. Okay, but that would probably happen by Wednesday. After that, leave it alone. And if the Fed will not disappoint, I think we are going for one more push down on the euro dollar and actually all the majors. And that's what I believe was going to happen. Unless the Fed disappoints and it changed the direction. And then we are after the same 117, 118 we have been talking about for so long to complete this potential triple cycle. Maybe even higher than 118. Pound dollar was moving in a beautiful range and by Friday started to break below it. Now the biggest question, what's going to happen? We still have the bigger range on a daily. So are we aiming to the bottom? Chances are there. We don't have any bullish divergence right now. Nowhere. So yeah, we can go and try the sells. How? You currently have a trend line here. So going back to the trend line or close to that could lead us for not bad sell opportunity. This is doable, yeah, okay, in the beginning of the week. But remember, only if you get good risk reward. If you don't try to make a hero call, let it go. Once it's ready, you will know. Dollar Canadian. Now dollar Canadian is a mystery because I still think there should be one more push up. But we had a bullish hidden divergence on a daily chart. We never completed a good convincing divergence on the 4-hour chart as a support, just one wave. So I will not be surprised at all if this is just a small correction to somewhere like here before one more push down. There is a not bad chance at all that the dollar CAD will take us to 123, 124 zone or even to 120 zone. And here comes the Fed once again. What the Fed will do. If it disappoints, we are going all the way down. If it doesn't, we are going for this double wave we've been talking about, to 135, 136. So my recommendation, patience. If the Fed really makes the call clear and you see that all the dollar pairs start to gain the momentum with the dollar, that's your call to go and look to buy the dollar CAD because it should take us to 135, 136. If it doesn't, we are going to 124, 123 at least, and there maybe all the way to 120 before we will turn it around big time. So there is no setup currently, but that's two scenarios we have to watch after the FOMC, and it's going to be very, very interesting. And that brings me to the US oil, which, take a look on the weekly cycle. Okay, remember that we spoke about 51, 52? That's where we got it there, and we start the correction down. Now, I believe, since this is the second false break in a row, we had one here, we need to get below this bottom, pull back, and we are after sales. And I believe there is a good chances we are going down. Now, we cannot trade this double cycle, so we first of all trade this double, or we can call it triple. I'll be completely fine with that. We are going to here, that's 45, 44 zone, even like 43. And after we will see, because if it continues lower, then this double cycle, which we have had, is just a correction of something bigger. And according to the monthly chart, we might, from here, even see one more bottom for the divergence to create it there. Now I know it's too early and really something we cannot talk about right now, but on the short-term correction is reasonable and acceptable. Now what do we do if there is no false break the way I just show to complete and the momentum breakout down, and it just retrace and go higher? Then our levels are getting bigger and bigger, because then we might go all the way to the 161, which is above 60. That's also doable, okay, on a longer run. On the shorter run, we would be, let's double click, okay, move it. Okay, we might go in a shorter run here, that's around 54, 55, and then go look for sales. But again, that's for the shorter. Okay, so we have to complete it. Now, it makes sense that we will get this break below 48. Why? Because if we take a look on the 1 hour chart, it starts to build itself by cycles. So I believe we might get this cycle to complete, pull back, and a drop down all the way. So the bottom line from my point of view, look for sales while this top holds. And aim 45, 44, 43 at least, because we might get even 39 to be completed the middle of this scenario, and there is a not bad chance that all this would turn to be just a range. Okay, because we did have false breaks here, so it might turn to be a range right now. That's also a scenario. Alright, going back to the majors, New Zealandian dollar. I want to talk about this one because that pair might be a monster. Now on the last week we had the central bank keeps the rates, and we saw the New Zealandian dollar flying up. All the New Zealand pairs actually reacted aggressive. If you think about it, why? Right? The reason is the investors were expecting from the central bank to take an action, and it didn't. It said, yeah, we will, if there will be a reason, but they didn't. And the disappointment of the bears, and were expecting for some kind of action, was clear. They got rid of their sell positions, and the pair is flying. Now, going up still makes sense. If you remember the annual forecast we've been talking about, we said well, we should go all the way to here. So it doesn't really surprising. What is surprising that is belief on the central bank action. Anyway, technical view, we might go and complete this triple cycle. We might go and complete some special cycle here. We still have plenty of room, and we might get going until the divergence will be created, and it might happen after the Federal Reserve, so I don't kill the view that it might turn to be false break and we will continue lower. That's doable scenario, but currently doesn't sound right to me. So from my point of view, as long as we have a trend line here, as long as it holds, and that is a kind of a triple cycle on a 4 hour chart itself, this might be a buy zone. If we can get closer, we can have a rally. We have this one that almost got closed already, and we have this gap to be closed as well. That take us higher to around 0.74 or 0.75. So on the 4 hour chart, if we can get that, and the Fed will not ruin the celebration, that might turn to be a very good buy opportunity following this potential triple cycle. Alright, so eyes on it. That could turn to be really, really good. And Aussie dollar could do same scenario. Find the bottom soon and continue the correction. We need one more like a play here. Something like that. Okay, for divergence to create. And I believe that's what's going to happen by Wednesday. After that, if the Fed does not ruin the celebration, we are going all the way up. If it does, then we are going to turn around this pair. A pound Kiwi, get ready for a monster investment. Okay, now I was looking for 225, 226 area, which stays in history currently, because we did reach the almost 220. Fine. The gap was closed here. Fine. And the pair retraced. But the divergence would remain potential here. I believe we are for a monster. Now, it depends not only on the New Zealand, not only on the Fed, it depends also on a referendum, which will happen 2 weeks from now. And anyway, the levels we should get ready to are 190. How good that could be. If we are there, this is a 61.8, fourth bottom of this divergence potentially. that's gonna be huge opportunity if we get it there. If not, and we complete a false break, we might the week after that look for buy opportunities. Anyway, in terms of investments, 190 could be amazing place to start and catch the potential buys. Okay, but very slow, small risk because of the referendum in UK 2 weeks from now. The smartest thing is even to wait after that. Yeah, but if you want to get involved, then 190 could be awesome place. It could be slightly higher, of course, once we get this cycle and the divergence to complete. And don't just attack, wait for the divergence to form and the candle pattern to appear. Bullish candle pattern, of course. Then we can start the attack, and then we can even think about 225 or even higher. Aussie Kiwi, since not holding the 105, completing the double cycle. That should end around 103. From my point of view, I am still only and only after buys. I explained it not once, not twice. And this is the cycle I believe we are after right now. I want to see this divergence completing itself. I believe it's going to happen around 103, slightly higher, slightly lower. That's where I will want to start to collect the buys again. What we need to get is false breaks, momentum, retrace, and buys. According to the special cycle we start to see potentially on a daily chart, we might raise all the way to 108, maybe even higher to 110. And according to the monthly chart cycle, we might get it all the way to 120. It's early right now. On monthly chart, there is even a chance, we had one false break here, one false break here, that we are after range. So that means we even technically could see one more false break here before we start the movement all the way up. That is doable. That's why I say start to gain it slowly. Okay, that cycle will come to the end. The New Zealand Central Bank will have to intervene unless the Federal Reserve will do the job for him. That's one of the things I believe the New Zealand Central Bank rely on. Okay, and that's going to be great investment opportunity. Dollar yen continues to move inside of this range. Technically, it has all the reasons to continue lower to 102. Let's start with 105, then 102 and 100, maybe even lower. Okay, so I keep my bearish view as for now. But we have to remember that there is a chance, especially if the Fed will act, that we will see this as a bottom, retrace, and a rally again. It's early to talk about it right now, but it's definitely an opportunity. Euro yen, same story. Last week we said we can get this pullback and expect a drop down. We do have it. We continue lower. I still believe we are after 118, 117, maybe even lower for this pair. And same with pound yen, which I believe, as long as it didn't complete another false break. Okay, we had one false break here. If it will complete the false break, great, we're going to look for buys. If it continues lower, we are after 147 at least, maybe even lower, before we can talk about buys. But get ready for these reversals for one reason. This special cycle is about to complete. Alright? Keep an eye. This is going to be very great opportunity. Okay, and that brings us to the last one, New Zealand and Canadian. Another interesting pair from my point of view. This triple cycle, well, actually it starts to be less interesting because yeah, we did reach the 50. Ignore, game over. For long run, game over. For short term, we might get a bottom very soon next to the trend line, which could provide us opportunity to start look for one more push up, okay, to create or recreate the divergence on a daily. But it's it's intraday and short term, so I'm gonna talk about it on my daily forecasts, very likely. Okay, so on this term, it's on long term, it's not important. Now take a look here on the S&P. What is it doing? You see that? There is still very big chance we are after 2200. We will know that after the Federal Reserve, but it's getting ready for a potential reversal situation. Right? Now on short term, we've had this special cycle on the 4-hour chart. So it makes sense that we will get something like that to here by Wednesday. So on the short term, I think we can look to try and sell, because we did have the false break here and a breakout down to here, so we could expect one more push down. For that, mark the trend line here from the tops. If we can get it closer to the trend line, like 2102, 2105, I can look for sell opportunities there. How? Dropping to 1-hour chart, we will want to get this. Then a false break and break of the trend line of the correction, and we can try the short. This short should take us to below this bottom, which means like 2080 or so, and then I can look on short term to get out of the position and close the profits. And then by Wednesday, we will see where the wind will blow again. Thank you very much for watching this video. I hope it was helpful for you, and I hope you enjoy it. I do enjoy it always to talk about the market, you know that. I really love it, and I love to share my trades, the way I'm going to act. So thank you very much once again. Feel free to ask your questions, leave your comments, share it with everyone who you believe can have any kind of benefit by watching that. Help us to spread the word. Your feedbacks are more than welcome, so feel free to throw a line in your busy time. And I'm sorry it took very long, but it was very important to me to cover the scenarios and get you ready for the FOMC week, one of the most important weeks on 2016, and definitely on the summertime. Thank you guys, I'll see you soon. Yours, Vladimir Ribakov.